Hi everyone, so my name is Vadim. I will be leading the Healthcare 2024 panel. So very excited to have these esteemed gentlemen join me here today. We'll structure the panel really in two parts, speaking about where we are today, what are some of the challenges that we're seeing in the healthcare ecosystem from the funding side, from the technology side, and then with an eye towards 24, looking towards some of the opportunities, how the environment might stay the same, how it might change. So first, we'll start with a brief round of introductions. So I'll just kick us off. So I'm the founder and CEO of Bench to Bio. Bench to Bio is a boutique consultancy firm. We work with early stage biotech to get them from the bench into biotech and into biopharma. Before that, most of my career was spent in pharma, Pfizer, Beijing, and a few other companies. Before that, I did nonprofit work in Africa on expanding access to HIV and malaria. So that's what got me into this industry. With that, I'll turn it over to John.
Hi, my name is John Michael Cataldi. I'm the managing partner for the Native American Venture Fund. Primarily, we leverage tribal sovereignty, the special rights by which tribes have for business purpose, for economic development, not just for the tribe, but also for the portfolio companies, which we, in essence, do a reverse merger into the tribal domicile. It's not a way to get around law, it's a way to work in parallel with the law, but primarily to definitely for the benefit of both Native Americans as a profitable ESG. Got deep into healthcare, AI. One of the demo portfolios I'll give today is about within the healthcare sector. In a prior life, I was the CEO for the Seminole Tribe of Florida, ran 49 of their businesses, added $2 billion to their top line, and roughly $500 million in savings on their bottom line, from cattle to genomic farms to the Hard Rock energy drink and everything in between. Prior to that, Fortune 500 consultancy from Home Depot to UPS for globalization from domestic to international markets. Went to law school to be able to better communicate with attorneys. Will never practice a day in my life. For those that are attorneys in the room, God bless you. Love you for that. Spent 10 years in investment banking, EVP at Turner and Company, primarily pipes, everything from biotech to advanced technologies. And had to stay in the military for a little bit, helping Uncle Sam get from point A to point B. So that's in a nutshell, please.
Thank you, John.
There's a microphone. Just turn it on.
Is this on?
You just hit the switch.
There you go.
Actually, technology challenge. Good morning, my name is Norman Friedland. I'm by background training a corporate finance lawyer. I've been in the technology transfer venture capital space since before the fax machine. You were all too young to know what that is. It's a black box. You get this paper and it comes out the other end. And about 5 or 6 years ago, realized that there was a tremendous need and tremendous opportunity to find alternative sources of capital, which I call mission funding, especially in the life science area. And very, very excited to be here. We've gotten to know Marty and his network, and the concept of presenting to the family offices how they can use their private foundation dollars with tremendous impact, with very little risk, actually, but to drive mission, patient-centric mission that can happen in real time, not 10 years or 20 years from now. That's what we're seeing. That's what I'm quite excited to talk about with Vadim and John and our colleague. I can't see, but we understand that. Thank you, Marty.
Thanks so much. Gaurav, we'll turn it over to you.
Sure, thanks. So I'm Gaurav Mehta. I'm a director with Pinta Capital Partners. We're a private equity group focused on healthcare services investing. We are the largest owners of skilled nursing in the country, with over 750 skilled nursing facilities in our portfolio. We have an additional 30-ish or so healthcare services companies, from early stage to control investments, where we have ownership in. And prior to being founding with Pinta, I was a healthcare investment banker for 10 years. Most recently with Citibank, covering healthcare services and biopharma. And then prior to doing investment banking, I worked and led US Oncology's corporate development group, which was a Welsh Carson-backed company until we sold to McKesson Corporation. And my other experiences include private equity, hedge funds, and management consulting. I'm looking forward to sharing our thoughts today on kind of where healthcare is headed, and some of the problems and challenges, and then sort of corresponding trends that are coming through.
Thanks so much, everyone. Thanks, Gaurav. So I think we could start off by just giving a set of kind of set the stage for where we are today and some of the challenges that we're seeing. So maybe from each of your perspectives, if you could highlight what you're seeing, and then we'll get more towards possible solutions. So Norm, do you want to kick us off?
Thank you. So Paul Foley, who's out there, made mention of something that Tim Draper said yesterday, and that is the opportunities based upon the financial crisis, the financial challenges that life science companies are facing. It's really blood in the water. The companies that were venture funded in life science 3 or 4 years ago are all going to be out of business. They're running out of money in the next 18 months. The companies that went public, the valuations are in the toilet. And so what's going to come out of that, as Tim Draper said, are some tremendous opportunities, some buy opportunities. And factoring that is the fact that the science that has been created over the last 5 or 10 years, as you heard yesterday from Stingray, as you're going to be hearing from other people, that science has dramatically changed where patient-centric healthcare can go. And so our thesis, the thesis that we're working on, is that the capital that's needed to drive those solutions to the market can't come solely from ROI capital. ROI capital has done a good job of getting drugs into the market for 511,000 diseases. 511,000 diseases. 10,500 diseases are not even on the radar screen. Correct, John?
Correct.
They're not even on the radar screen of ROI pharma companies. And so you've got a situation where you've got tremendous need for new drugs for rare diseases, which are not so rare. If you've got them, it's not a rare disease. You've got to be able to afford that drug. $1 million a pill won't work. And if only those drugs are available to a certain demographic in this world, then the investment that you should be making is in pitchforks. Because when people realize that there's healthcare solutions out there and they can't get them because they can't afford them, that's when pitchforks are going to be your best investments. What we see is that there's tremendous capital that exists in these private foundations that needs and wants a place to go that's impactful. And what we're seeing are companies, and one of the companies that's here today, Sonanacell, and several other companies we work with, Genomic Expression, SciTech, and Ceramedics. And we can give you information on all those companies. These are world-changing companies in healthcare. And so putting those types of companies together with the philanthropic capital is going to drive these patient solutions, patient-centric solutions that are affordable and accessible. And so we're excited about opening up that dialogue for you. We're happy to be working with John and Vadim and Marty on this, and we can follow up as appropriate through Marty. Thank you, John. Your call.
If I may just jump in very quickly, just to echo what Norm has said. So I'm speaking to early stage companies every week who are tremendously impressive. These are founders that have had successful exits, come with tremendous pedigree, and they tell me that, look, we're failing the pattern recognition test of traditional VCs. Venture capital has become more risk averse. they have pulled back, and we're caught in, what's called the valley of death, where, we were told to go out there, get some safety data, now we come back, and they say, well, come back to us when you have human data, right? And the goalposts are moving, and what I've seen is that companies are looking for alternative methods of capital. And if I had a dime for every company that has told me, do not go to VCs, don't bother wasting your time, find us more innovative investors, I would probably start my own fund. So, John, with that, over to you.
I would completely agree with the, as far as your synopsis, that the goalpost keeps moving further and further down the road when it comes to investing. But during the pandemic, during COVID, lots of money was made, hands down, and people got used to doing things differently. They went online as opposed to going to their doctor. They went not just to telehealth, but also teledelivery of medicine. The business models themselves have changed. And a lot of businesses, especially in the biotech side, has almost stayed the mindset to pre-pandemic without taking a look at what has the pandemic brought and delivered. As an example, we're in the AI, the world of AI right now. There are, from the COVID research and from other genomic and CRISPR, what have you, research that's been out there, there is literally terabytes of amazing data that one can't sort individually, but used with the application of AI, we've been able to design hundreds of tests through global research by compiling that to AI and then directing it into something that's actionable, not something that's going to take 4 or 5 years of research, 2 years of clinical studies, 1 year of performance data, and then hopefully the FDA will bless it. Secondly, thinking about models in a different way, looking at becoming more disruptive and turning a model onto its ear, and also looking at focus markets. In 2030, approximately 65% of the US population is going to be senior citizens. There is a huge wealth and opportunity within senior care, elder care in that marketplace. And that's going to be a big, a big venture opportunity. Also, mental health crisis. There is a huge mental health crisis that's never really been addressed. I guess if you're locked up with your loved ones for a year and a half during COVID, you could go nuts. But at the end of the day, at the end of the day, go back to my my normal voice. At the end of the day, we have to look at here's the buckets of challenges in the healthcare. How can we address those challenges, and how can we act differently? Not in as a biotech mindset that would take years of operational development to actually get to profitability, but how can we shorten those timelines, whether it be licensing the technology or handing off the technology to somebody else to bring it to commercialization, or be able to create an assembly line of existing technology and then repurpose it for the needs of today, including there are several drugs and opportunities of for diseases that are not necessarily on the pharma ROI, but these drugs from yesteryear would actually be able to cover, that spectrum portfolio. So as opposed to trying to reinvent the wheel, let's look at repurposing the IP that's currently out there and change the business model to fit today's capital environment.
Thank you, John. Gaurav, I know you have a unique perspective given where you are in the market, so I'll turn it over to you to see, what challenges you're seeing currently.
Yeah, so I'll start with kind of what we're seeing in our portfolio, and I think everyone in the room is probably well aware of this, but there's this massive clinician shortage, right? That you're not getting enough nurses in the hospitals. We don't have enough nurses in our nursing facilities oftentimes. There's just this massive shortage, and there's really, instead of seeing more people come into the industry, you're seeing actually people more exiting. COVID-19 had a mass exodus of nurses that left the industry, including physicians as well. And so I think that's one of the biggest problems that are facing. And there's I'll talk later about what I'm seeing in terms of how the problem's being addressed, but that's definitely one of the biggest issues we face. The second thing I'll say, which again, everyone in the room probably knows, is healthcare inflation. This continues to be a ongoing problem, and it's gotten to the point where we're spending over $3 trillion a year, $3 trillion on healthcare. This represents 18.3% of GDP. And that number is only going up. It's projected to increase, even more so by 2030, right? So how do you address healthcare inflation? Well, people thought insurance was going to be the cure. And I can tell you right now, insurance companies are not incentivized to reduce healthcare inflation. Why? Because they only grow, their profits grow because of the way their revenue model is sort of structured, right? They get a 15% profit regulatory limit. Anything that is above that 15%, they got to return back to their clients. I don't know any clients who get a check back from their insurance company, right? So again, there's some misalignments there, and so what you're seeing now is a response in these really new, interesting care models that are coming to market, which I'll talk about a little bit later. I'm just going to touch on those two areas. Honestly, I could spend the whole day talking about problems with healthcare, but I think those are kind of two ones that are more acute that we observe in our portfolio.
Perfect, thank you, Gaurav. So maybe to take an optimistic turn and thinking through how some of these challenges could be resolved, and maybe some case studies or some silver linings that everyone on the panel is seeing in the market, or possible solutions that you may be working on. So I think it's a great opportunity. I know all of you are doing some tremendous work, so I think it's a great opportunity for everyone to hear about that. So Norm, maybe I'll turn to you.
Thank you. Thank you. So one of the companies we're working with, their CMO is sitting here today, which has developed an ultrasonic solution for cancer treatment that is non-drug, non-radiation, non-chemo, non-surgical. It's better than a magic bullet. It's real. You mentioned drug repurposing. You're working with another company called SciTech. They have taken about $500 million of R&D that comes out of Big Pharma and NIH, and have figured out how to encapsulate a known cancer drug so that it can get delivered to a patient very, very effectively. Where, again, on a few $1 million of funding, they're sitting on $500 million of prior R&D. Genomic Expression, which is a company we work with, which I have personal experience with. They saved my wife's life because they determined the character of the tumor that Sloan Kettering never even thought about understanding. This is a company that is able to understand RNA and deliver it for the personalized medicine that Tim Draper was talking about. And there's Ceramedics, which is another company. We work with their management, again, out of Sloan Kettering, tremendous science. And we see these companies, Vadim, you see them, tremendously experienced management, tremendously impressive science that didn't exist 5 and 10 years ago. And you're adding in the AI, you're adding in the CRISPR, you're adding in all the genomics. These solutions are going to be delivered, but they're only going to be delivered if there's a capital that has a mission focus and not an ROI focus. If it's an ROI focus, these companies are all going to fall into the valley of death. These technologies are all going to be abandoned, and we're going to be back to where we are with healthcare that doesn't deliver solutions and is too expensive.
I agree with everything that you just said. I think there again,
Can you repeat that?
I think for your mom and potentially significant other, I agree with the majority of everything you said. There some plausible deniability. I'd like to give a brief case study on the application of tribal sovereignty. Now, I could speak for days upon days upon this, but I'm going to try to surmise it in about possibly 6.5 minutes, if everybody can be patient with me. Is it up on the?
No, I think Marty, can we?
Yeah, okay, I have not loaded, let me know.
So maybe we could turn it to.
Let's turn it
to Gaurav, and then we'll
Yes.
come back to this. So Gaurav, from your perspective at the later parts of the market, what are you looking towards for 2024? Which trends do you see continuing, which trends do you see reversing, and kind of what is top of mind for you?
Yeah, sure. So let me address a clinician shortage because that was one of the areas I identified as a big issue for us, and that continues to be an issue ongoing. What you've seen, kind of in 2015, 2014-ish was like wave one of trying to address the clinician shortage. A lot of companies like ShiftKey, ShiftMed, Incredible Health, all of these companies were trying to develop basically tech-enabled staffing agencies to solve the clinician shortage. And then by using technology, you can deploy resources faster, more efficiently, and sort of support the sort of the demand waves that come through. And during COVID, these agencies saw a dramatic uptick in their market penetration, right? Because during COVID, we saw just an enormous amount of demand, multiples of what we've seen historically, and not enough nurses to meet that demand. And so bill rates during that period were like north of $200 an hour for a nurse, whereas pre-COVID, you get a nurse for $60 an hour. And so I even heard stories of $400 or $500 an hour. That's at certain points. These agencies really were able to grab a lot of market share from the incumbents, large publics that are out there. And I think the future is likely to be these incumbents are likely to kind of continue to gather more and more market share. So how are they going to go about doing that? Well, I think there's going to be a pretty sort of strong segregation between sort of tech-enabled and traditional staffing. And tech-enabled agencies trade at much higher valuations, typically a gross profit multiple today versus sort of an EBITDA multiple. And I think they're going to be able to buy traditional agencies at kind of your 3 to 4x, smaller agencies, 3 to 4x EBITDA, where they're trading at, on a normalized EBITDA basis, north of 10, right? And so there's just going to be multiple arbitrage, and I think you're going to see a lot of consolidation in the sector that occurs over the next several years, with a kind of mindset of a lot of the smaller guys getting completely taken out of the industry. The whole sort of mom and pop names are no longer exist. You're also seeing a second wave of new companies coming to market to address a clinician shortage. So with the staffing agencies that are tech enabled and what they were able to achieve, when you have bill rates of $300-400 an hour for a nurse, hospitals are not, that creates a whole new problem for hospitals, right? And their profitability mark. And so you're seeing quite a bit of new sort of staffing software as a solution type models where they brand themselves as a workforce management solutions company, and they're devising technology that the providers can use to create flow pools, for example, or they use their own staff that maybe sort of don't have an assigned shift but can jump in and take on an extra shift. And those are technologies have been developed over the last couple of years, and you're starting to see those really start to get acquired. And you'll see some more kind of acquisitions and consolidation in that space as those sort of take more and more market share. So I think, overall, again, for the 2024, I see a lot of consolidation in the staffing. And, I would say the other piece that you're seeing more on the early stage side around the clinician shortage is how do you make the actual job of a nurse and of a clinician easier, right? There's a lot of administrative tasks that are required, with technology comes additional tasks that, really can burn folks out. And you're seeing AI really become part of a solution to that. And so I would say that there are several early stage startups that are trying to address the various kind of manual tasks and automating them. And for example, prior authorization, I think there's a lot of several companies trying to solve the prior authorization paradigm between payers and providers and try to create that more of a seamless experience. Companies like Verada Health and Cohere Health. So you'll see a lot more of that here in 2024. Funding for those increase. But that's sort of a quick, sort of corresponding trends on the clinician shortage. And then on the healthcare inflation side, you're seeing kind of new care models that are coming about. I think everyone's heard the term value-based care, and you got companies that are like large and publicly traded like Agilon, which are, going in and trying to manage the Medicare Advantage population more effectively and at a lower cost. What is value-based care? For those of you who don't know what that is, what it means is you're putting the risk more on providers from payers, and you're kind of giving them and sharing in the savings that's created by managing the cost of the patient. And so there's a lot of value-based care models that are coming out. There's a component of technology. There's a component of relationship and care that has to come together. And so again, companies like Agilon that are public are really kind of seeing a lot of dramatic growth as they help providers kind of move towards fee for service to your capitated payment models. And then finally, one other area I'm seeing a lot of, and I think that's going to continue to grow, is direct primary care, or DPC for short. And this is kind of a concierge medicine model where sort of like One Medical, which is probably the most well-known DPC business, but where they go in and they charge self-insured employer groups a PMPM, or per member per month fee, and provide, basically unlimited care on the primary care side for their members. And the way it's different is the providers have much smaller patient panels, maybe like 800 to 1,000 patients versus 3,000, which is a normal primary care physician today. And in doing so, they're able to really manage the patient's life a lot tighter. And then by managing the life a lot tighter with the assistance of like technology, you're able to really kind of bend the cost curve, because you bring more of the type of care that maybe will go to a specialist. Maybe you bring some of that into the primary care clinic. You're able to kind of catch stuff before it gets out of control, before that ER visit happens, as well as, oftentimes these DPC providers create narrow networks of specialists they work with, and negotiate kind of cash pay rates, and they help reduce, they're able to get way better rates than what insurance actually pays, because there's no like reimbursement model. And so I think you're going to see continued movement and growth in direct primary care. That's kind of it in terms of kind of corresponding trends with some of the two challenges I brought up.
Yeah, thanks so much, Gaurav. Marty? Yeah, please.
It's for Gaurav. So Gaurav, I think there's like a bifurcation going on in healthcare, and I think we talked about this last week or something like that. And I just wanted to because so many people are moving to the concierge model, right? And at the same time, there's a big wave of retirements of doctors, right? And then you have these urgent care centers, which are all headed by nurse practitioners. I don't know if you want to talk about that, take 2 minutes and talk about this bifurcation that's ongoing. And because I think your focus is on delivery, right? Actual service delivery, whereas the market is not talking about service delivery, I don't think. What are your thoughts?
Yeah, it's a good point. The DPC model is a concierge model. It is, but one of the key benefits that are getting advertised again is like, we can bend the cost curve, right? And I think that's getting left out of the conversation. The latest DPC models are really focused around that, and showing self-insured employer groups a 20, 30+% sort of reduction in their cost of care. And it's branded as a concierge kind of stratification. Hey, I'm getting a higher level of care than I would, and all of that's true. But you're also actually seeing a reduction in cost, and I think that gets lost in sometimes in the conversation around DPC. Is that your question, or that's sort of kind of where? Touching on that?
Not necessarily. I just think from a social, that there's political motivations and market motivations. Right, that so many doctors suffer from burnout. COVID really emphasized a lot of things, right? Caused a big wave of retirement. As you said yourself, the cost of nursing has gone through the roof. I think the average salary for nurses in Miami was something like $80,000 a year before COVID, and now it's $120,000 a year. Right? Because they all became traveling nurses, and also everybody had to raise their compensation dramatically.
Marty, no. I sit on the board of a hospital. So pre-COVID, nurses were earning about $45,000.
Okay.
Post-COVID, we've doubled their salaries to about $80,000.
Okay.
So yes, that is hurting margin. Okay. However, travel nurses actually did a lot of damage to the bottom line of hospitals in many, many different ways. So at our hospital, we stopped using any travel nurses. Okay, because the service.
I'm just talking about the market. I'm not talking about.
But a lot of hospitals have stopped using travel nurses because the level of care for patients was very poor. What has happened is there has been a reset of salaries for nurses across the United States.
Yes.
Which was positively impacted by the whole travel nurse impact. What I'm seeing from our perspective, and we're part of a network of 13 hospitals across South Florida, right? So we had close to 30,000 employees.
I believe
so we're not small. We're putting a lot of effort of working with local government rather, where we are actually sponsoring students to go to college, and we're paying 100% of their degrees, because to reduce the shortage, what we're doing is we're locking them in. We'll pay your studies, but then you can work for us for 3 years and you can't leave the state of Florida for 10. So we hold the nurses in the country. And it's working.
That's awesome.
It's
I
working.
think that's a violation of a contract.
But there's still
Yeah,
a
you know,
shortage. So,
interesting enough, in our
Gaurav?
sorry, I was gonna say, interestingly enough, like, you know, we're solving the shortage, but we acquired an international recruiting agency just about a year ago called Access Therapies. And, you know, at the end of the day, the nursing graduate rate in the US is not keeping up with the nursing retirement rate, right? And so we think international nursing is actually going to be a critical part of solving the issue. And we acquired an agency accordingly, and they bring nurses from the Philippines, you know, right? And I think at the end of the day, that's, and then we lock them into 3-year contracts, right? So it becomes a pretty interesting kind of longer term nurse who stays with the hospital for a long-term assignment. And oftentimes then it ends up becoming full-time, you know, sort of at some point within their contract.
Gaurav, are you seeing a shift into the home setting from the hospital?
Definitely, that's a huge trend that's ongoing. Largely driven by payers trying to push more care in the home where it's cheaper. It's a lower cost of care setting. And a lot of the trends you're seeing in that place or that spot, it's more early stage, right? So how do you enable a lot more care within the home? So you have a remote patient monitoring piece of it, which is pretty critical. You have to have the staff that can like go in and do visits as well, right? And so, you know, my wife's brother-in-law is CEO of Contra Costa County's health system, and you know, one of the biggest issues they have with discharging patients into the home is they cannot get you know, DME and the home set up in a way where you can discharge them. And so it ends up being a cost center for the hospital because they can't get reimbursed after a certain number of days by Medicare. And so I think there's going to be a massive sort of investment opportunity around enabling care in the home, getting patients home set up in time, you know, so that the patient can be discharged, et cetera. It's definitely a hot area, and you'll see that more and more over the next several years.
Fantastic. Thanks so much, Gaurav. So we may come back to this, but John, I want to give you the opportunity to present.
Perfect. So let me just use share screen. Okay.
I can actually see the screen, Matt.
Yeah, please.
Thanks.
But you want to make sure that you're still on the camera, so.
Okay, so
So the podium.
I
is
will
the-
not move from
Let's
this
switch.
location.
Let's
Okay,
switch.
all right. And I'll give you this mic. Set up here. I slid more Macintoshes off of podiums than I could want even endeavor. Okay, so again, my name is John Michael Cataldi, Native American Venture Fund. This is a portfolio company that's been near and dear to my heart, primarily looking into the world of patient-based diagnostics. Can we go to the next slide?
Yes.
So first off, I want to talk to you about this whole tribal sovereignty 101. So first off, tribes have a unique set of laws. They're considered domestic sovereign, meaning that they only have to adhere to the federal laws by which the tribe is recognized for, and they do not have to adhere to any state laws unless they waive the rights to the state. Tribes, based upon a Supreme Court precedent in 2014, are no longer domiciled on the reservation. They go anywhere in the domestic United States because they are not within a state. Their boundaries are with wherever they have an economic interest within the United States or its outlying territories. Tribes have something called self-determination, meaning they can charge their own tax. They can make their own laws. If you're within a tribal domicile, you're subject to many of those laws. The only laws that would actually affect a tribe or the tribal members themselves are where federal law would actually conflict with the tribe. Federal laws are there to safeguard the tribal interest, not necessarily regulate the tribal interest. So under domestic sovereignty, a tribe can, in essence, print their own cash. They can't sue or be sued. And they don't have the types of glass ceilings that normal corporate businesses would, or the regulations. They have up to 30% of federal contracts or within the monies within the federal budget under the Buy Indian Act has to go to a qualified Native American tribe. And so the ability of somebody stepping in as a tribal agent in regulating or working with the tribe creates a unique competitive advantage within the marketplace. Can you go to the next slide, please? So everybody's familiar with what you see as the big guitar. You may have seen it as you're coming up this direction. So the very first and foremost thing is there's still fundamental rules in all things business. The fundamental rules being it has to be an attractive growth industry. It has to be aligned with that of the tribe as well. In other words, it has to be a karmatic business, akin to Mother Earth and Father Sky. You can't pollute the world. You can't be selling opiates, which is a big tribal addiction. You need to work within the normality or the ethics of the tribal domicile that you're in. We're always expecting a high return. We've been awarded Native American Venture Fund several times ESG awards. We don't want them because ESG, in essence, makes you sound like you're not making profit. Whereas within this domicile, within this framework, investors like high returns within their investments. We also want to make sure there's a good management team in place and there's a market size, and that competitive landscape will allow us to insert ourselves. And most importantly to us, we don't like other tribes doing the same business, because if we aren't competing with the normal businesses, the last thing we want to do is compete with another tribal entity. That creates lots of friction, and when those frictions happen, it usually ends up in federal court, and that's a completely different beastie that nobody wants to be akin to. And the only way to remove tribal rights is a supermajority of Congress. And Congress can't even determine what color they want on their carpet, let alone having a supermajority of anything. So if you have a good business, you have good bones in the business. So then if you put tribal sovereignty on top, then you're amplifying the ROI. So whatever ROI that you should have in a normalized business, you could actually add another 3 to 5x on top, or on an exit ROI, another 5 to 10x on top. The profitability starts in essence from day one, because there's lots of tax incentives, tax credits, tax deductions, not to mention having the competitive advantage in guaranteed federal contracts. And those that do business with the federal government are also kin to the federal government standards of diversity. And tribes are not a minority. They're not Black, they're not white, they're not even Native American. Tribes are considered a Super 8A. They're their own domestic sovereignty, and under constitutional rights, under legislative amendments, under executive orders, they must get their piece of the pie. The challenge has always been that most Native American tribes operate under 8th to 10th grade educational level, as far as the management or the oversight of the tribal government. So thinking of high complexity types of businesses in AI or things that are far reaching that can make the tribe, in essence, tens of billions of dollars, is usually out of reach for most tribes. You go to the next slide. So it all starts with captive management. And in our portfolio, you know, one of the things you never want to do is let a tribe or tribal government run away with the business. That's almost like bringing a government entity to create a profitable business. It doesn't work on the federal level, and it certainly doesn't work when we're trying to privatize a business. So in essence, everything we do, we must have, in essence, complete control, but yet autonomy from the tribal government. Next slide. So I'm going to give you a case study of a current on a current project that actually started a little bit over 2 years ago at in the middle of the pandemic. And Clear Health Pass has, in essence, a next gen diagnostics health screening platform. We don't pull needles in arms. We don't put swabs up noses. We, in essence, put a Q-tip in your mouth, and then we get your saliva, we send it in the lab, and that could actually track 101 chronic conditions, from COVID to cancer to everything else in between. And the idea is having a fast, reliable, and covered service by all major insurance providers. And the idea is that we're
we don't want to be at the end of the disease cycle. The idea is to be in the beginning of the disease cycle, to be able to, in essence, look at things that are, you may be subject to. If you go to the next slide, please. Oops, okay, that's correct. Sorry, one more down, sorry, thank you. So the idea is pre-diagnosis. If you pre-diagnose a medical condition before it's actually a medical condition, there's huge cost savings. So if you're in elder care, being able to look at drug sensitivity, to food allergies, to your propensity for cancer. Unfortunately, in this room, 1 out of 2 of us will die from a disease that we don't even know that we have. And by the time we know it's there, unfortunately, it's now chronic, systemic, and the mortality outlook is not that great. You'll see from a standpoint of misdiagnosis of diseases of state as well, as almost one in 3. Cardiovascular risk of mortality is 1 in 3. Mental health disparity is 1 in 5. And preventable mortality is 1 in 2. Now, here's the scary part, and this is why tribes love, in essence, when we talk about aligning with tribal business, regardless of the normalized factor of the United States, tribes and other disenfranchised populations have about a 5 to 7 times greater average of these incidences. So from a tribal's misdiagnosis, it's not 33%. In many cases, it's 60, 70%. Mental health and disparity and drug addiction. There's one tribal reservation that has a 90% addiction rate and 100% unemployment rate of 3,100 members. And the cardiovascular disease risk within the tribal nations, and unfortunately, disparaged and disenfranchised, is not 33%, but in essence, it's 75%. Go to the next slide. And then we look at, so we want to make sure that first off, that there's a big marketplace. So this is the foundational stuff. Also, is there a reason to be able to enter into a marketplace? So this is an example of exact sciences. And in essence, you give yourself your own prostate examination test or a colon test by putting a big bucket in your toilet, pooping in the bucket, playing chemist with your poop, and then sending it into the lab. Not an attractive, there's a big yuck factor to that. This company, though, started within 12 months of its inception, was already trading on a market cap of over $1 billion. Mid this year, they were at a little over $2 billion, $2.5 billion, and they're targeting $4 billion by 2027. Next slide. The biggest challenge with this company is it has approximately a 70% to a 90% misdiagnosis rate. Now, here's the company making amazing amounts of money, has huge poor, as far as poor ratings, and this is one of several companies within the market we were talking about self-test or taking the test in your own hands. So that checked the second box for us. Okay, this is a good company, or this is a good market to go into. Next slide. So when you jump into the target markets, when you're looking at for a federal tribe, this is where tribal sovereignty comes into play. Let's look at the federal contracting and research grants available that could potentially offset my cost of gaining customers or my cost of doing research or the people by which we'll be doing the research. And we asserted there's a huge opportunity within that as well. So now we put into the tribal advantages. For the next slide. So the idea within the tribal advantage or acting as collaborative with the tribe is that we find amazingly great deals in our suppliers. Anybody who does business with the federal government must be able to purchase at what they call the best friends basis or favorite nation status. And that could be 30, 40, 50% reduction in price. The project and contract milestones and the R&D is also an amazing aspect that tribes have, again, guaranteed set-asides and guaranteed as far as guarantees efficiencies. Yes, sir.
So if somebody has a contract with the government to provide a service at a 30% discount, they must give you the same pricing?
Or better. Favorite nation status. We're able to ship cheaper than Amazon and swipe better than global pay as far as with credit cards. Excuse me? We actually purchase on the GSA schedule.
Okay, so it's the GSA schedule that you're talking about.
But yes, we purchase on, there's different flavors of the GSA schedule. So there's the price that DOD purchases at,
Yes.
and there's the price that the post office purchases at. We purchase at a higher level rate, more closer to DOD than with the post
We're the
office.
favored nation of all federations.
We are the favorite, because again, the federal government has a caretaking relationship with the tribes, not me, but with the 574 Native American tribes, 222 Alaskan tribal corporations, and 11 super corporations in Alaska. So, and go to the next slide, please. So here enters as far as the tribal modeling, we're able to actually acquire both IP and materials acquisition at a fraction of the price. We went and did, primarily what was said earlier in the panel, is that there's lots of IP out there, and we used our tribal preference to be able to purchase companies that were within, that were in some challenging times, and be able to sell them that we could actually take their IP within this model and make it great again. Go to the next slide. Using NIH grants and funds, and various other set-asides on R&D, we're able to save or decrease our cost of researchers and research equipment and people and R&D costs between 60 to 80%.
So maybe that's the question is, why don't you guys, so specialty pharmaceutical companies are 50% of all pharmaceuticals prescribed in the United States. Why don't you guys open up a specialty pharmaceutical in tribal nation, you know, take over that marketplace?
Well, here's even a potentially even a very scarier idea. Why don't you, there's a law that's about, that only allows the manufacturer of pharmaceuticals to re-import pharmaceuticals back into the country. There's a whole other model, I put that with an asterisk. There's things I say that could happen within tribal or Native America. It's the importation of free trade zones or tribal free trade zones was a 2-year study with Holland and Knight, and we had to create all the legal ramifications and indemnities for the tribe. The last thing that we want to do as a fund is create a situation that could actually harm the tribe, or even worse, set federal precedent that would bar the tribe from ever entering into that business. So we have to be sensitive and balance the legality of doing something with the opportunity to do it just because it's within a tribal nation. So it's a bit of a balancing act, and everything you're saying is absolutely true, and it can happen.
You could be like Canada.
Well, we could be, in essence, Canada with the United States, or we could be India in Canada. Canada's too expensive. India is a tenth of the price.
Works for me.
So anyway,
I'm sorry, keep on.
so anyway, go to the next slide. So extending this mindset, we've been able to put tribal domicile, in which Canon and AG, two big manufacturing and medical services, said we're going to give you our favorite friends in status for the procurement or manufacturing of a lot of our medical specialty devices. Because we combine CLIA labs, that's under the CLIA Amendment Act of 1988 with tribal domicile, we could create and bring a test. It usually takes FDA a 2-year cycle to get from point A to point B to have a 510K authorized diagnostic test. We did the exact same process in 120 days for our first COVID, flu, A and B, and RSV. Because we took, again, existing technology, brought it within tribal domicile, and we are, since we're a CLIA lab, we can do lab developed tests. Now, the FDA says we're going to change those standards, and we're going to be now regulating lab developed tests. Well, again, based upon us as a tribe and as a domestic sovereign or as a tribal agent, we are now working with the FDA because they have a caretaking relationship with the tribe. We're now sitting at the table with the FDA and Centers for Medicare and Medicaid to help them set policies that still allow tribes to have their preference, but unfortunately is going to regulate the rest of the world into something potentially less favorable for them. So the outcome that we've had through this process, go to the next slide for me, is that we've been able to have cost reductions of 30 to 50% of our suppliers. We were able to actually acquire a company that was in bankruptcy that gave us six additional labs, $5.5 million in assets, and even AR, and we just sold off a portion that was in a 363 bankruptcy for $7.75 plus million on that. By cleaning it up. But the reason why we got the opportunity in the first place is we were in front of the judge that this business was about to be put into a 7. and was about to be just dismantled, everything would be going to the auction block. We said we're trying to save jobs, and also we're trying to create an economic development for Native America. And with that said, the judge dismissed the bankruptcy and gave us possession of the company. There was a lot more details in that story, but it worked out fairly well for us. We were able to fast track our patents, our patentability, and the contract opportunities that we have right now before us, and will be, this portfolio will be up and operational. This company will be completely up and operational in mid-February, so mid-Q1 2024. $300 million in tribal GSA contracts. We're looking at $24 million in elder care. And we just signed an onboarding contract, one of the largest animal care. It's the Amazon of animal care. I'll just leave it at that. For the onboarding of our pet tests, which also the DoD has interest in, because we discovered that pets was that pandemic vector and potentially a vector for future bioterrorism. So the federal government has lots of interest in that, and as does the domestic pet owners. Our R&D acceleration, we're launching 101 tests in the market, which is it's an enormous undertaking, but that's our 3 to 4 year plan. And each that could be running in parallel takes 120 days from end to end. And that is utilizing grants, CLIA, ANI enhanced R&D, but primarily that gets us through from clinical to production. Our financial growth, we've already been awarded, or this company's already been awarded a $15 million standby letter of credit, and that's being financed upon with labs now in Texas and Tennessee, working with those opportunity zones that we're looking to be within, and we're going to stack federal tax credits and tax deductions and other federal-based deductions on top of it. So potentially for every dollar made, that will potentially offset the tax implications for the portfolio and for its underlying investors. And lastly, it's put us in a good position to hit the capital raise button hard, fast, and furious, probably starting from now through first and second quarter of next year. So in essence, that was the quick how tribal sovereignty can affect a portfolio and a company. Just think of other companies that potentially be cookie cuttered, copied, and put within this type of demographic. I'm happy to go into a lot more detail about the intricacies of tribal domicile, but don't want to take away from the.
There's a lot of people in Florida here who can be with you offline. So in your offices are where?
We have a few. We have one in New York, but primarily post-COVID, I'm happy to say we've all been able to live within our own abodes in Florida, enjoy the nice warm weather. We do have offices in South Carolina, in Texas, and in New York.
And
Where in Florida?
Florida, no, we actually all work remote in Florida, so we're all visitors.
They meet with you.
Just call me up and we'll find a lovely place or a country club to go have a drink and a sit down.
So there's $25 million in equity. What is it? I mean, it's so well, what's the free money, number one? And also, is that a slug in the fund, in the venture fund?
That is the company is the funds put their money in. I put, before this company even launched, my partner and I put $1 million+ each to get it going through the fund. We like to set things up for the investor. The NAVF investors all converted over, or many of them converted over to the company. We had a pharma fund, but post-COVID, and after we sold off all of our PPE assets, we jumped into that. But I don't want to take away from the focus of this. We talked about evaluation and term sheets and private placements and all that. If anyone wants to have a sidebar after the fact, I'm happy to talk about this. And also for those that maybe have hospitals or senior care centers, this lab network is amazing. It's flagship, it's next gen. And so would also love to talk on customers as well. But again, don't want to take away from the focus of this panel.
Right, so people are co-investors basically.
Say again?
They're co-investors. They're fund already investors.
They're co-investors. They're taking the next tranche. They
We
can.
got, sorry, 10 minutes.
Okay.
All right. No, John, thank you so much. So maybe in the interest of time, we can move to closing remarks. So if there's anything that you're excited about for next year, any kind of guidance for the audience or anything else that you want to leave the panel with, I think the floor is yours. So Norm, maybe we'll start with you.
I think there's some questions online.
Oh, perfect. Yeah. And then we'll move to Q&A.
Thank you. Is on, yes, this
You
is,
need to hit this, the switch.
I'm hitting.
Yes, sir. There you go.
Thank you. So, my concluding remarks, a couple of points. We talked about services, healthcare, things like that. From my perspective, that's moving the deck chairs around the Titanic. If you take a look and Eli, you can chime in on this. The cancer mortality hasn't changed over the last 25 years. The same percentage of people who get a cancer diagnosis are dying today as they did 25 years ago. And that's because the drug development in most cases hasn't occurred. And that's going to continue to be the case because it's ROI driven. What we've heard from Tim Draper and Paul Foley is the market opportunity for these new technologies is here. It's coming out of the financial crisis. And so it's here, not just for profit, but for mission delivery. We also know that the dollars in those private foundations, the program monies, not the endowment monies, the program monies are there. And the program monies are looking for solutions, are looking for impactful solutions, and they're looking to work with companies that have these solutions with experienced management, with committed management, and committed solutions. We'd love to follow up with anybody. We can talk with you directly. Vadim is certainly a facilitator. Marty is certainly a facilitator. But the exciting challenge of moving patient-centric healthcare is really here with the right kind of capital. Thank you.
Thank you, Norm. John, over to you.
I cannot be more privileged to be part of this panel. And again, also, thank you for Marty putting all of this together. If everybody can give a big round of applause, because this is the amount of work that it takes to put this together. I tried one time and I would never do it again. So you are a gentleman beyond reproach. I think this panel echoes some salient points that there's so much opportunity in the repurposing and focusing in various categories of healthcare. From my aspect, we're in a different model as far as one of somewhat disruption, but you have to stick to the business, the foundational business values. The metrics must make sense. $1 in must equal $1 out at some point. And having cycles that go for years or decades without profit, that's maybe the old guard, but it's not the new, not in today's economy.
Thanks, John. Gaurav, I'll turn it over to you.
Yeah, sure. Marty, thanks for hosting and putting this together. It's been nothing but a pleasure, and I agree with all kind of comments that have been said ahead of me. I would just say in closing, I wouldn't be doing my job if I didn't ask, but we're actively looking for home care, home health assets, pediatric assets, RPM assets as well. So, in terms of kind of we're out of a family office and we have about 10 billion to AUM. So actively lots of dry powder, just kind of looking for good opportunities. So please be in touch if you've got something, you think might be interesting for us to look at.
I think we have some questions in the audience. Do you have
Absolutely. Questions?
Can you speak to two things? Can you speak to the political ideologies or whatever, the internal politics of tribes within Oklahoma out and relative to outside of Oklahoma? Number one, and number two, I find the tribes in Oklahoma, I did a deal with Capital Gaming Group, and so the revenues those guys are making, why aren't they, do they have a sovereign wealth fund? Why are you coming to outside Indian capital when they seem to be having tons of capital? They could create a serious endowment and pension fund and sovereign wealth fund.
Oh, I completely agree. First off, tribes in Oklahoma are under public law. So that's the difference between the tribes are a different set of laws in Oklahoma than anywhere else. So there's a little bit of that's a whole other conversation. So legally, they're structured a little bit differently. And tribes have a high, let me phrase that. Everybody is familiar with the term 1%ers. So there's 133 gaming tribes. Of those 133 gaming tribes, approximately 25% of them make bank. The rest of them operate bingo parlors out of trailers that only cater to their own tribal members. That might be as remote in the middle of Fairway, Texas, population 69. So, I mean, again, there's huge disparity there. To be able to create a sovereign wealth fund, that in theory is fantastic. The challenge is when a tribe starts making that kind of money, they start making really unique investments. Or those investments are kind of run almost like a friends and family network. When I was at the Seminoles, I literally had to scream and bang my fists against the table to the point where if you buy this, I swear to God, guys, I'm leaving. This can't happen. There was a desire to create or to spend, let's just say quite a bit of money on indoor ski resorts. That was one that I turned down. There was another bank, there was a bank they wanted, because to the tribes, banks are worth a lot of money, and having it is a badge of honor. The challenge with this bank, it had about a little north of $4 billion in toxic assets associated with it. So, again, tribes jumping into things that they're not familiar with, they found themselves losing a lot of money. And so they can't tend to invest into things that are fairly simple, mundane, but important to them. Cattle, cigarettes, gaming, anything outside of that, or oil, they'll be scratching, I would say they will be scratching their heads, but there's a high barrier of entry to overcome there. Did I answer your question?
I think we have time for one more question.
Sure.
I wasn't sure with you, it's just a question on your fund. How many tribes are in your $25 million raise? How many tribes?
Ironically, we never have asked a tribe for 1 penny of money. So we don't ask tribes to invest. That runs.
I mean, how many tribes are you serving?
Oh, serving. I apologize.
I didn't ask.
Oh, no. We have a foundational tribe, the Blue Lake Rancheria Economic Development Corporation. It's a wholly owned corporation, the Blue Lake Rancheria out of Humboldt County. That's the one that's publicly known. There are several other tribes on the back end, a consortium of 12 other tribes that are part of the tribal network that we're working with. An online search will probably say some of the names, but tribes that don't want to be announced publicly, we keep very private and to ourselves. To answer your question?
Sort of, so it's around 10?
Around 14.
12, 14 tribes, which equals how many units?
Each how many units?
How many units?
How many people?
Oh, how many people? The tribal members themselves?
Yeah.
Probably 500,000 tribal members.
Thank you.
So, by the way, there's only 3,500,000 tribal members in the United States.
But when you do work with the tribes, you're also extending it to the companies they own, is that correct?
When we work with the tribes, we are, okay, so the way that we work is out of all the revenue that we generate, we block a percentage of that revenue that goes out to the tribe. We give the money directly to the tribe. What the tribe does with it, we are not to tell them what to do with it. It is their money. It is, they primarily put it into social programs or into a golf course, whatever it is that they want. But they mostly put into their own Indian tribal healthcare. We give a lot of the tests and equipment, especially during COVID. We had 53-inch trailers delivering free stuff to the tribes, practically on a weekly basis. So what we do in tribe and for our diagnostic testing, we don't charge the tribes anything or the individual tribal members anything. But since the federal government has a caretaking relationship, they have their version of Medicare and Medicaid that we do bill for our services, but the tribe will never see a penny of us charging them, but we utilize their sovereignty to allow us to grow this business in the way that we have.
and also other portfolio companies, the way that we had in the past.
Perfect. Great.
Great job, guys. Thanks so much.
Thank you.
Thank you.